Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, January the 29th. The year's 2023. Let's talk trading, weekly, open, and gap. These videos are for educational purposes only. Your results may differ from mine. So let's take a quick look at the weekly chart here, and we can see all the open gaps have filled. And it looks like the pound had gapped down, opened at 82. It's at 92, so it's almost 10 pips above the open right here. You can see it's 13 off the high and 19 off the low, so not much range. But then again, we're only 5 hours, a little over 5 hours into the trading day. Of course, a lot of people are watching football here. So maybe that's why the action isn't that much at the moment. But we'll just have to wait and see what happens. So we're putting in the range for the week, the opening range. And remember, Friday was an inside bar. Taking a look here at the monthly chart, yearly chart, 302 pips above the monthly open. Now, if we're going to expand the range, most likely we'll probably expand it to the upside because we're 551 pips to the downside. But anything could happen. I mean, it could reverse, but I don't think that's going to be the case. And as I mentioned, Friday was an inside bar. So we've got a break at 24.18 to the high and 23.44 to the low, and that 44 is in the launch pad. And as you can see, lots of inside bar action. In fact, we had there's an inside bar, and then 1, 2, 3 trading days ago there was another inside bar. So you can see here there's another one, another one, another one. A lot of inside bar action. So we're kind of range bound between about 24.40 or so down to let's call it 22.60. We seem to be stuck in that range on the daily. And so far, no pairs over 100 pips in range, and the pound's only at 32. You can see a buy zone trade would have paid off. Weekly open crossover here to the north would have paid off. Not enough range for the rats at the moment. Trading pivot trading plan. Bambino flex indicator says go long. Price near the pivot. It says the bias is short. Near R1 bias is short. Near S1 bias is long. But that's on we're looking at the H4 chart right there. But those were definitely daily pivots. I just like to show H4 so we can see all the other levels. Now, if we move on, monthly pivot's been taken out. The weekly pivot, we've missed it by 5 pips. It's down there at 23.66. And we got down to 23.71. So we'll see what happens there. But the daily, we've taken that pivot out at 22.55. Oh, no, it wasn't 22.55. I'm sorry. The daily pivot was at 23.84. So if we go back to chart, it's all in this pretty congested, kind of hard to see right here. I guess maybe if we go down to a lower time frame, we can see, whoops, that's the wrong pair. How did that happen? There we go, 2384 pivot. Put that back to H4. And some reason it seems like my mouse is sticking or something. It keeps changing pairs on me. Okay, computer. Not sure why it's sticking like that, so I'll pause the video, wait for this thing to get unstuck. Okay, it looks like computers come back. So, in and out of that lower wick zone, with that upper limit being 2387, well, 80 or 89.7, call it 2390. And for the range, once again, only 32. We went over last week's ranges at the weekly wrap-up video. So nothing's really changed as far as the expansion. Walmall lines, looks like there were some trades to be had, but you know, once again, looking at these ranges, nothing to write home about. Take a few pips and be done with it. And in fact, there was something I read, and it basically said that you really have to know what you're doing. So I know that seems obvious, but when you're trading, you really have to have a trading plan. You have to have risk management, money management. I know it almost sounds trite, but the thing is, you know, do you actually have a plan, a written plan, something maybe you could put on a 3x5 card? Maybe you've got it memorized, but it's a definite plan, and it's something that's what you do. You do it every time without deviation. Basically, you become that trained monkey, right? So you see the trigger, you enter the trade. You see the exit, you know, you exit the trade. Or you put your TP on and your stop loss on and let the market do the heavy lifting for you. But, you know, you really have to know what you're doing, especially on the risk side, the downside. It's like, do you really realize how much you're risking? So you don't get caught up with the emotion of the trade, thinking, oh, okay, if I add in here, then maybe I can get some back. You know, unless that's in your trading plan, just don't do it. Just stick with your plan. And your plan really should be simple. I mean, if it's got more than 3 to... I would say more than 3, but you know, some people like to have confirmation or something. So, but if you've got more than 5 steps to enter a trade, I would say you might want to really, you know, look at what you're doing, and you know, saying, is that really necessary? Because there's a lot of stuff I've seen on charts that, you know, isn't necessary. I mean, I show you a lot of different charts here, different methods, but each chart in itself is pretty simple. You know, sometimes I might have something complex on there, but that is usually because I'm trying something new and I'm just working on it. And that's just something I like to do. I like to try and find new systems. You know, if I wanted to, I could have just did nothing but the buy zone, just stuck with that, or, you know, nothing but the rat trade. But, you know, each one of those is something that I observed, discovered, you know, wrote maybe a frequency distribution, tested it out, and it's like, yeah, this is something that can make money. And so each one of those methods, you know, has a payout, but it's the type of thing where I know, okay, I'm in the wick zone and I might also be in the rat zone. So it's like, okay, I got 2 things going for me. And I might be able to do a holo trade higher open or lower open trade while it's in the rat zone and wick zone. So with all those different systems or different methods, I say, it kind of stacks the odds in my favor when I take an entry. But especially if you're trying out, just try and keep it super simple. So like on this screen, we're looking at higher lows, lower highs. We've got the multimeters that show you whether or not there's a trade active. You've got candle colors for multimeter, so you know how many M1 candles have been read, how many M5 in a row, how many M5 candles. And right there you can see there was a higher low trade. And actually, if you had taken that trade, since the ask is above it, you'd still you would still be down, but right there it just dropped slightly below. And that's another thing to consider. Do you know what the spread is and when it's out of whack, when it's too much to take a trade? Because the worst thing to do is get a trigger, but the spread's too big and it comes down and it doesn't even give you a chance to break even, and it turns around on you. But this screen's pretty simple. You've got these other lines that could act as a support or resistance. Like you can see here, one ball got put in. So let's see, does it push down to this one and reverse? Or maybe it pushes down to this one and reverse. So, each one of these lines, is corresponding to a previous 1, 2, or 3 ball. And I only go back so many. Just to, once again, to keep it simple, not have too much on the chart. And you can see here that spread is widening. Not a good time of day to trade. And as I mentioned before, let's see, close minus open from the year to date, we're up 2.49%. We do the range by month. And you can see we're at 606. And as far as the trade reminder, nothing much has really changed since Friday. But traders, I just want you to consider what you're doing and literally write it down on a 3x5 card. If you can't, then maybe if you can't do that and you're having a hard time turning a profit on a consistent basis, then I would say the method is too complicated for you. If you're turning a profit on a consistent basis, then don't change a thing. You can ask Walmart or anybody that has come to me, and I say, hey, if you're making money, don't change a thing. Actually, Walmart he's changed a few things, and he's making even more money. I think I'm his good luck charm. Anyway, you just have to make sure you know what you are doing. And I just really can't emphasize that enough. It's, like I said, when I heard it or read it, it's one of those things. It's like, wow, I really need to talk about this on a video, because it's just something that we need to hear, from time to time, because chances are we may have strayed away, even slightly, because, sometimes that could be the difference that makes a difference. So get your trading method, down on paper, or if you want, you can use the TRO My Notes indicator, and you can literally put your trading method on the chart, and it tells you exactly what to do, when to do it. So, fellow traders, hope you had a fun and safe weekend, and if you're watching the championships, I sure hope Kansas City gets beat in the Super Bowl. Just don't like Kansas City. I'm a Raider fan. And I hope you have a profitable trading week and end this month on Tuesday with a profit. So, fellow traders, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.